Hello students, welcome back to Career Power Hyderabad powered by Adda 24/7. So students, we are having a special session for banking awareness exclusively for SBI Clerk Mains. So this is our second video. The second session is about monetary policy. So today we'll have a quick discussion about monetary policy as well as some MCQs on the monetary policy. So before going into the session, please subscribe our channel, share the channel with your friends. So do like our videos. Also join our Career Power Hyderabad app. So do download the app. We'll provide the link in the description. So our app will provide classes for Bank, SSC, RRB as well as for SI Constable. So do download the app, share the app with your friends. It will be very useful for the aspirants who are preparing for Bank, SSC, Railways and SI Police. So let us go into the session today. So today we'll discuss monetary policy. So this monetary policy committee, okay, we'll see a brief discussion about the monetary policy committee. The monetary policy committee is a statutory institutionalized framework under the RBI Act of 1934, mainly to maintain price stability and also to improve the growth in the country. So monetary policy committee main objective is to maintain price stability. So this committee was recommended by the Deputy Governor of RBI, Urjit Patel, in 2014. So with the recommendation, so this particular monetary policy committee was established, and the chairman of this committee will be the governor of RBI, who will be the ex officio chairman of this committee. So this monetary policy committee has total 6 members, of which 3 will be from RBI and 3 will be nominated by the Government of India. So please remember all these points because we have MCQs on these same points. So decisions are taken by majority and governor will have a casting vote in case of tie. So governor has a casting vote in case of tie. Okay. So what is the function? So the monetary policy function is to maintain the policy interest rate to achieve inflation target of 4%. To maintain the policy interest rate to achieve the inflation target of 4%. So there are few key terms like the liquidity adjustment facility, LAF. LAF means liquidity adjustment facility. So it is a tool of the monetary policy which allows banks to borrow money from RBI using the repurchase agreements, and also banks can make loans to RBI through reverse repo agreements. So here in the liquidity adjustment facility, banks can get loans from RBI and banks can give loans to RBI. So that is liquidity adjustment facility. So liquidity adjustment facility has two systems, the repo rate and the reverse repo rate. In repo rate, the RBI will provide money to commercial banks. In reverse repo rate, RBI borrows money from commercial banks. So see the difference. In repo rate, RBI will provide money to commercial banks. In reverse repo rate, RBI borrows money from commercial banks. See the difference between both of these. Okay. Next is marginal standing facility. Same way, same like repo rate. RBI will provide money to banks, but it's an overnight loan. It's an emergency situation where this marginal standing facility rate will be provided. So next terminology, cash reserve ratio. The cash reserve ratio is something that where every bank should put certain amount, certain reserve amount in the form of cash before providing credit to customers. So every bank, they need to put certain amount in the form of cash with RBI before providing credit to customers. Suppose I invested money in a bank, I deposited money in a bank. So not every penny of my deposit will be going as a loan to the customers. Here, some amount of my deposits will be saved in the form of cash with RBI. Okay, so that is cash reserve ratio. So the next one is statutory liquidity ratio, where some amount is put in the form of cash, gold or RBI approved securities. So some amount is required to be reserved in the form of cash, gold or RBI approved securities. So these are statutory liquidity ratio as well as cash reserve ratio. So please remember all these basic definitions, very, very important. So let us go into the question, first question for today. Who regulates the monetary policy in India? The answer is RBI. We already discussed the RBI regulates the monetary policy in India. So this main function is to maintain price stability and to maintain the required level of liquidity, cash in the economy is the main duty of RBI. The next question, what is the prime objective of RBI? What is the prime objective of RBI's monetary policy? It is price stability. So price stability. So to maintain price stability is the prime objective of RBI's monetary policy. So please remember all these points. Next question, in which year the RBI Act 1934 was amended to provide a statutory status for the implementation of flexible inflation targeting framework? So yesterday video only we discussed about flexible inflation targeting framework, which was introduced in which year? May 2016. In May 2016, this flexible inflation targeting mechanism was introduced by amending the RBI Act. Okay. The next question, an empowered 6-member monetary policy committee was constituted by central government by notification in the official gazette after amending the RBI Act. By which act? So by which act this monetary policy committee was constituted? The answer is the Finance Act of 2016. So Finance Act of 2016, the monetary policy committee was constituted. So please remember all these points. Okay. So next question. Who is the chairperson of the 6-member monetary policy committee? We already discussed who is the chairperson of this 6-member monetary policy committee. The chairman is RBI governor. RBI governor is the chairman. Okay. The next question. So the members of monetary policy committee will hold office for a period of how many years? The members of monetary policy committee will hold an office of how many years? 4 years or until further orders, whichever is earlier. So their maximum term is 4 years. Maximum term is 4 years. So currently we'll see the composition of the monetary policy committee, which has 6 members. The first member is Governor of RBI Shaktikant Das. The Deputy Governor, who is in charge of monetary policy, Michael Patra. The Executive Director, who is in charge of the monetary policy, M.K. Sagar. Ashima Goyal, who is the Prime Minister Economic Advisory Council member. Shashanka Bidhi, who is a senior advisor at the National Council for Applied Economic Research, which is a New Delhi think tank. Jayant Verma, who is a finance and accounting professor at IIM Ahmedabad. So these are all the 6 members of the monetary policy committee, of which the last 4, 5, 6, Ashima, Shashank and Jayant Verma. So they will have a maximum term of 4 years, and other 3, you know, they are official members. Okay. So the 3 members will have 4-year term, and these can't be reappointed. So they can't be reappointed. So say Ashima, Shashanka, Jayanta, Verma, they can't be reappointed. So please remember all these points. Okay. Next question. Who determines the policy interest rate required to achieve the inflation target? Who determines the policy interest rate required to achieve the inflation target? You know the answer, Monetary Policy Committee. Monetary Policy Committee maintains price stability by maintaining the policy interest rate to achieve the inflation target of 4%. Okay, so very simple. So Monetary Policy Committee is required to meet how many times in a year? Monetary Policy Committee is required to meet how many times in a year? The answer is 4 times. So Monetary Policy Committee is required to meet at least 4 times in a year. So do remember this point. Okay. So what is the quorum for the meeting of Monetary Policy Committee? So what is the quorum for meeting of Monetary Policy Committee? So how many members are there in the committee? 6 members. So what is the quorum you need? 4 members. So 4 members is the quorum required to have a meeting. Okay. So monetary policy will meet at least 4 times a year. The quorum is 4 members, and each member will have 1 single vote. And in case of equality of votes, governor will have a casting vote. Okay. The next question is the same. In the event of equality of votes, the power of second or casting vote is rested with whom? So in the event of equality of votes, the power of casting vote is vested with whom? The answer is RBI governor. The answer is RBI governor. Okay. The next question. So name the interest rate at which Reserve Bank provides overnight liquidity to banks. So name the interest rate at which Reserve Bank provides liquidity. Reserve Bank provides loans to banks. The answer is repo rate. So in repo rate, RBI provides loans to banks, commercial banks. So please remember this. So name the interest rate at which Reserve Bank absorbs liquidity on an overnight basis from banks. So name the interest rate at which RBI absorbs liquidity. RBI absorbs liquidity means RBI absorbs cash. RBI absorbs money. So the answer is reverse repo rate. So in reverse repo rate, banks will put their excess amount with RBI. Banks will lend money to RBI. So do remember, They'll slightly change the words and they'll give you questions, but the concept is the same. So please remember the concept. So don't get confused of the words. Okay. The next question, what is the full form of LAF? What is the full form of LAF? We already discussed liquidity adjustment facility. Liquidity adjustment facility is a full form of LAF. So we already discussed what is LAF. Okay. So see the question carefully. Name the facility under which scheduled commercial banks can borrow additional amount of overnight money from RBI by dipping into their statutory liquidity ratio portfolio up to a limit at a penalty rate of interest. So name the facility under which the banks can borrow additional amount of overnight money from RBI by dipping into their liquidity adjustment facility, statutory liquidity ratio portfolio up to a limit at a penal interest rate of interest. That means by mortgaging their securities, banks can get money from RBI. So which is this facility? The marginal standing facility. So if you see, very simple, marginal standing facility is rate at which banks can borrow overnight funds from RBI against the approved government securities. So approved government security is a part of SLR, statutory liquidity ratio. By using these approved government securities, banks can get money from RBI, which is called the marginal standing facility rate. Okay. So what is the full form of CRR? What is the full form of cash reserve ratio? What is the CRR? I said the answer, cash reserve ratio. So full form of CRR is cash reserve ratio. Okay. So you know the cash reserve ratio is where the reserve requirement that commercial banks require to maintain in the form of cash. Okay, maintain in the form of cash. So please remember. So see the question carefully. The share of NDTL, net demand and time liabilities, that a bank is required to maintain in safe and liquid assets such as government securities, cash and gold. So the share of net demand time liabilities that a bank is required to maintain in safe and liquid assets such as government security, cash and gold. So what is the answer? The answer is statutory liquidity ratio. Statutory liquidity ratio. So we already discussed. So what is statutory liquidity ratio? It is the reserve requirement that a commercial banks are required to maintain in the form of cash, gold reserves, government approved, RBI approved securities before providing credit to customers. So please remember all these points. So the last question, see carefully. RBI uses the outright purchase and sale of government securities for injection and absorption of durable liquidity. This operation is called. So RBI uses the outright purchase and sale of government securities for injection and absorption of durable liquidity is called what? The answer is open market operations. Open market operations is the sale and purchase of government securities and treasury bills by RBI. The main objective of open market operation is to regulate the money supply. To regulate the money supply. To pull the excess liquidity, to release liquidity into the market when there is no liquidity. So this is open market operations. So these are all the important MCQs related to monetary policy. So do subscribe our channel, share the channel with your friends, like our videos, and also join our Telegram channel. We have beautiful MCQs coming up in our Telegram channel also. You can practice in the Telegram channel. So do download the Career Power Hyderabad app. We provide coaching for Bank, SSC, RRB as well as for SI Constable. So do download the app. We'll provide the link in the description as well as comment section. And also our offline classes are running successfully. So you can visit our branch or you can call our numbers. So the numbers are on the display. So thank you students. We'll meet in the next class.